Hello traders, Cousin Vinny coming to you from theclosingprint.com on December 20th, 2015. A few days left before Christmas. We, in this video, will talk about the indices. The S&P 500 is off by 2.69% for the year to date. NASDAQ is plus 6.58% year to date. IWM minus 5.84% and the NYSE minus 8.04%. Now, if you weren't around Friday, we had quite a follow-through, a gap down that we're concerned about and we're very watchful of, as you can expect. Tick and Tick Q are both bearish, moving lower. Breath, NIMO, and NAMO are both below zero line. We want to see that move higher if you're bullish, and if you're bearish, you want to see that continue to move lower again. Breath, with regard to MADs and MDDs, no major distribution days or accumulation days. Last week, NYSE, we see the high-low, tagged 50, turned lower, and is now looking like it may want to bottom. CPC plus 1.03, moving higher into the week. VIX, we closed Friday at 20.70, with the high of the day at 23.30. US dollar is at 98.73. The euro is off for the week, and yen spiked Friday at plus 1.10%. Bonds, TLT continues to move sideways, up a couple of points, down a couple of points, very near the 2012 levels, and junk bonds are still at the lows. UST, SPX, the bond stock ratio, 65 MA continues to stay flat, and the ratio continues to oscillate around the 65 MA. Commodities, crude oil continues in its descending pattern, and all the commodities in general are lower. Sectors are mixed, so we're looking for signals there. And of course, we'll look at some IBD considerations, although I didn't see a whole lot to trade off of going into Monday. So if we look at the S&P 500, we are down 2.69% for the year. Here's the beginning of the year, January 1st. We initially moved lower, got back above the 2060 zone, moved sideways for most of the year, and then dropped off in August, as everyone is aware of. So now we're watching these lows that we're testing on Friday and concerned about the volume as it's ramping up very near what we saw in August, and MACD below the zero line, which if you've read my book, you know how to interpret that. We also have STO moving lower. So this doesn't bode well for the bulls for the most part unless all of those things change. Now we also note the volume by price bars over here on the left and how things taper off below these levels. Now if you are bullish, you can see these levels back here in January, February, these lows at 1988 are just below price. We also had these lows back on Monday at 1993.26, so we'll be keeping an eye on that for a bounce. NASDAQ obviously is looking much better. If you're looking for setups, I'd be looking for stocks that trade on the NASDAQ 100. Note the increased volume. We're approaching the levels that we saw back in August 24th, the waterfall event that we started on the 22nd and ended on the 24th down here at 37.87. Now I'm not looking for anything remotely like that, but it's just something to consider going on to into the week ahead. Note that MACD is crossing down below the zero line and histogram is negative. STO as well is pointing down and head back down towards the green zone. Here is the IWM Russell 2000 year-to-date performance. We can see we're down minus 5.84% for the year. And we can look at that chart. So we're not looking too good. We had a position in our 401k that we started back in here in November. We got out of that on Tuesday, Wednesday last week. And the reason was we saw a nice year-end dividend, and it pretty much had us break even at that point. We don't like the way this chart looks, especially considering this volume by price bar here, the rejection that we saw at those levels, and the 10 and the 30 period moving averages moving lower. The increased volume also was a concern, and the fact that MACD drifted below the zero line. Still is turning as well, like we saw on the S&P 500 and NASDAQ charts. Now here is a chart of XII. This is the ARCA Institutional Index. It's the 75 stocks most commonly held by institutions in their core portfolios. So we like to watch this index for indications what institutions might be doing. So we're down below all the moving averages. We're testing these lows that we saw back here in middle of the summer. These are the stocks in the index. Note where Stochk RSI has headed, MACD's below the zero line, and STO is turning back down, heading down from the red zone. Now, all this just tells us that we should be careful going into early 2016. Do we bounce here? Well, that's left to be seen, but we will be looking for confirmation before we make any decisions. So this could be building a base, a triple bottom if you will. Looking at these levels, we want to get an indication that institutions are coming back into the markets and that tick cumulative starts to rise again. That'll show sentiment of bigger funds and hedge funds and institutions are looking towards the long side. Again, until that happens, we are safe in cash with limited positions in our trading account. Looking at our indicators, tick cumulative has crossed this week, as we noticed back here. November, early December, we had this crossover to the downside. We're watching how price action is affected this week. For Christmas, we're not expecting a whole lot given the redemptions that typically come at the end of the year. If you read that Kramer article I sent out late Saturday, it makes a lot of sense. Whether you hate him or love him, it was a good article for informational purposes. Let's take a look at the NASDAQ. Tick Q gives you the same kind of look. So we had a crossover and then prices started moving lower. Now we're at the lower Bollinger Bands. We're watching to see what happens as the moving average continues its descent and how prices react on the NASDAQ, as we pointed out on the daily chart. The NAMO, or McClellan oscillator for the NASDAQ, reached a low at minus 65.80 2 weeks ago Friday. We ran up during the week, Tuesday, Wednesday, and of course everyone knows we failed Thursday and Friday. So we want to keep an eye on NAMO to see where this is headed, as well as NYMO for the NYSE, which gives us the same sort of action. Now we dipped down below minus 100 intraday and closed at minus 92.65. That's just the way stock charts works. They use end of day data. Note the moving average continues to drift lower, and we'll be watching this as well as the New York Stock Exchange composite for its reaction on Monday, Tuesday, and Wednesday of this short trading week. Note that the NYSE is continuing to move lower and is below zero. So if you're bullish, you want to see that turn back up, and if you're bearish, you want to see that continue to move lower. Taking a look at the volatility index for a moment, VIX has moved back into the 20 zone. Of course, we always look at this as an area where we might want to fade. So if you're bullish, you'd actually want to see this spike a little bit higher, maybe a test of the lows on the S&P 500, New York Stock Exchange, and the NASDAQ, as well as IWM this week. Get a little bit more fear in the market. As if you read Hugh blog, you know that VIX tends to spike in twos, as we see back here. These double spikes, double spike, triple spike within a short duration. So that is something that we want to watch for going into the week, and we'd look for a fade going into Christmas. Now we're not looking for a whole lot of action, as we mentioned previously, because this is Christmas week and there are a lot of redemptions that happen towards the end of the year. Not only that, but if we see any lower prices, we could see some more margin calls early this week. Looking at the NASDAQ, VIXN, we see the same sort of thing. Look for a double spike here and prices to test these lows early this week. So if you were following any of my posts this weekend, you note that I sent out a lot of charts on late Saturday as I was sitting here running through some scans. Now, I don't mean to sound overly bearish. It's just some observations that new traders need to consider going into the week of Christmas, that there's a lot of things going on that you just need to keep an eye on. So look at my charts and my stream with a grain of salt. You can see what it is right here, stocktwits.com/cousin_Vinny. For example, if you look at the IWM chart, note that we're down below Kumo and that Chiku is down below price. Now that's somewhat bearish until price action gets back above Kumo. So that's just one indication of something that you could consider if you just follow my charts on StockTwits. Here's the S&P 500. Note that we're very close to Senkou B, the lower part of Kumo. What you want to look for as a bull is a bounce off the lower part of this Kumo and a push higher into the start of 2016. So keep an eye on that. Note that Kumo had a twist here and that the right side of this is making a lower high and something that you just need to keep an eye on. Let's take a look at the NASDAQ. So here is the composite. The good thing for the bulls is that we're sitting right on top of Senkou A, the top of Kumo, and we see Chiku, however, is a slight caveat. We're down below price. That is somewhat bearish. Prices did drop down below Tenkan-sen, the blue line, and we're watching what happens with Kijun-sen, which is horizontal at this point. So look for a test of Kijun-sen if you're bearish. If you're bullish, you want to see a bounce and a move back above Tenkan-sen early this week. Okay, also note the Kumo twist and the lower high. If this twists back down this week, that could bode well for the bears and not so hot for the bulls going into 2016. Now here's a different look at the comp. Note the gap down that we saw on Friday. I only point out the late August similarity in that people were expecting a bounce here at these lows at 49.0151 in early July, late June. When that didn't happen, we gapped lower again. Of course, that was due to a 5200 cross, so we don't have the same situation. But we do have the 10 EMA turning back down. If you can see here in the zoom box that the 10 EMA is about to cross back down through the 50. That's somewhat bearish, and a resistance level overhead being all of these moving averages. So as long as the averages are descending, that's not bullish, that's more bearish. So we want to see price action get back above those levels and all the moving averages turn back up. Alright, so just a slight caveat for the week ahead for the NASDAQ composite. I also pointed out the US dollar. This is the monthly chart, and previous levels here are noted in a red shading as well as the red horizontal lines. Just to give you a point of reference, going back to 2001, the dollar continued to move higher, putting those highs at 121.21 as we know, and we're watching price action on the US dollar continue to follow its ascending 10 EMA. So just keep that in mind, that dollar strength will add a headwind to oil prices, which are already moving lower, as you're aware. I posted those charts this weekend with a comparison of the weekly S&P 500. We noted this rounding top look to things. I don't like the way this looks in terms of price action possibly moving lower and testing the lows, but we've been running up for some time. And note that every time the crude charts turn lower, as well as commodities, this is GTX, price action soon followed. Alright, so with crude continuing to move lower, down here at the 2008 lows, and commodities continuing to show weakness, that's also an indication that global growth isn't picking up as we would expect. So, therefore, I would keep an eye towards more weakness. If you read Bill Gross's article, his letter to shareholders at Janus, while it wasn't very enlightening, it did give you a sense that some bigger investors with deeper pockets may in fact be lessening their exposure and their risk going into 2016. What I'd like to see is a breakout above these levels to get more interested in terms of a long. Now, obviously, another view would be prices to move back to a level where the indexes were at a discount and an area where we might want to look at buying long funds in our 401k. So there are some caveats we have to keep an eye out for. Currently, we're about 95% cash in our 401k. Cash is a position. I just don't like the way the indexes are performing lately. And with year-end dividends, they were quite substantial in our long funds. So that gave us more of a cushion to get out of the markets at a time when there seems to be a lot of indecision going forward. Here is a chart of TLT. Note that we're only $2 or 2 points above the levels that we saw back in 2012. So bonds haven't really done that much either. We moved lower, obviously, in 2013, moved back higher in 2014, back down, and we're basically moving sideways for the past 3 years. So we're mostly cash in our 401k, and we only have 2 positions in our trading count at present. Okay, so here is the IBD50. This is for the week of December 13th, last weekend. Let's look at this week. I'm going to just click this tab right here and look at what's on here. BABA. I don't think BABA was on the previous week. Nope, that's back on. Oh, let me sort by. Alright, so BABA's not on there. I think Avago. Yeah, that's still there. Look at some of the other names that were on the previous week that maybe have dropped off. Google dropped off. No, Google's still there. Let me sort this by. Okay, that's a little easier. EPAM. Was EPAM on there? Yep. So we can start to see what's on each of these. So we just compare who's dropped off and who's still on the list. GPN on the previous week, obviously that dropped off. If you weren't paying attention to GPN, that really took a hit. Gapped down on Wednesday and saw a huge amount of selling. We got stopped out back here when we lost the 10 EMA, right on this red candle. So we had this nice gap and go, which turned into a 10E Stow MACD setup. Prices continued to hug the 10 EMA, ran sideways. And the way we use our stops, either we use the previous day's low, or you can use the 10 EMA. A close below the 10 EMA will typically get you out of the stock. So anyway, that's GPN. Let's take a look at the list here. IGN, I think that one. No, that one's off the list again. IDTI is back. Note ITC Holdings, Conventional Electricity. That one's green. That's interesting. I think that's new. Yeah. ITC is new. JCOM is back on. I know that wasn't on there. MPWR, that one took a bit of a hit as well. Same scenario here. A nice run up on this breakout right around the 5150 area. Prices flag, keep holding the 10 period EMA. A couple of areas here where you might have gotten out, then got back in on a 10 East Stow MACD setup. And then prices closed back down below the 10 EMA and never looked back. So you would have got stopped out again here after a nice appreciation of about 10 bucks, 12 bucks, depending on how you traded this. Okay, so stop, save the day, and the 10 EMA kept you in a nice trade. So let's go back. That's MPWR. And that's not on the list anymore. Nope. Nike, was that on the list? Nike was there. Let's keep looking. OLED Universal Display. That was still there. Looking down. Play, PSA, Qihu. What did Qihu do this week? Qihu was gone. Pool is back. Alright, Play is gone. No, Play is still there, sorry. Public Storage. Red Hat, that had a gap up, a gap and go. That was one we were watching. Had some crazy price action on Friday, but managed to close above the gap, held the gap, and things are looking okay as well on Red Hat. So, Starbucks, SBNY, let's take a look at the rest of these. SBNY is still here on this week's list. Smith & Wesson, still there. Tesoro, TSS, Alta, Western Alliance, Bancorp, and XRS continues to hold the 10 EMA moving higher. Now, if you haven't watched XRS, this is one that we've been marveling over. This trend break, if you draw a trend line down through here, when prices got above the 10 EMA, we had a nice 10 Esto MACD set up. If you even waited for MACD to get above the zero line, you had a nice trade. This ran up from 33, more than $12 to $14, continues to move higher, hasn't stopped below the 10 EMA. So this trade just continues to reflect strength in the face of weakness with regard to the indexes. So bottom line is, watch your IBD50. There's not a whole lot to look at here going into the week, but we will post some charts going into tomorrow. Later this evening, I want to spend some time with the kids. It's the last weekend before Christmas, so we'll have a little bit of shopping to do. Okay? So this is Cousin Vinny coming to you from theclosingprint.com. For you new traders, check out the blog. Note the address, theclosingprint.com/CV_blog. This is case sensitive. It's a Linux server. We typically post our thoughts for the day going into the opening bell, trades that we're looking at, posture on the S&P 500, and so on. So you can check those out. Also check out my book. This is a valuable resource for you new traders. If you don't understand the markets, this is basically 28 years of experience in a 298-page document or book that will help you greatly improve your odds of success in trading. Okay, so that's going to do it for me for the weekend. This is Cousin Vinny coming to you from theclosingprint.com and from the blog. If you're a new trader, just subscribe to the blog here. It's a spam-free site. Click submit and you'll get these delivered to your inbox each day. Take care. I hope this helps, and we'll see you on the stream on Monday.